we're in a chronic debasement at the moment, but it's going unseen. So there is what I call the Jedi mind trick, or the nominal normie effect, which actually sees something still going up, but people not recognizing by our accepted unit of account. So I have to make the case that we don't have a valid unit of account in any fiat representing any nation in the world right now. And in actual fact, we've had, since 1913, this huge financialization of everything. We've had the everything bubble. And right now, unbeknownst to many people, that is already deflating down. The only reason it's not being observed is people are watching dollars, dollar-based NASDAQ amounts, European, euro-based FTSE 100, or I should say maybe the pound if I'm saying the FTSE, or the DAX on the euro, etc., etc. So what we're actually being is we're being played for fools, on monkeys on essentially a greased pole, and that the unit of account is carrying the debasement, and that is part of debt. So I like reducing things really down to a simple context. Debt is just fiat with a timeline, a deferment, and a rental agreement attached, which is the interest rate. And we are seeing both devalue chronically, but we initially had, and this is why on our first appearance with you, we said the 2020 call was the biggest call we'd ever made in terms of significance for everyone. It was the turn of the bond market at the late 2020s. So if we, for example, take the silver chart, we've got a lot of, in fact, let me not do this one where I'm trading on. Let's do one where we just do a generic chart. So I want to show you a much larger time frame, Maggie. So this is the biggest setup, and I believe I probably showed it to you the first time, but it's worth reminding. It's worth a revisit one. So some of the going back to the slap in the face the metals market took in the 30th of January as well. We were on alert notice because we expected it once a certain level was run. We had a second interim on a far bigger pattern. So let's show you that pattern and make that make sense for you and your viewers. 49.81428. I just have to do a short adjustment on data. So what I'm doing is I'm making one little point. I'm taking it out of the equation. This is our draw tool, by the way, which our community members get. So this is an HVF setup. Again, the simplest structure is 3 impulses. Simple, quick explanation is a squeeze in volatility where you're funneling. And this is multi-generational. That starts from 64, Gulf of Tonkin. It actually starts from the Federal Reserve formation, you could even say. But here's your 3 impulses reduced to a simple diagram. And inside of that, and I call it you mentioned Brent, he's a good guy, by the way, and I like him, but I called it the Brent Johnson headless silver guys, because he said, the silver guys are going to go all headless. We've crossed $25. And I said, Brent, mate, you're wrong on that one. This is the beginning of something far bigger. And we had the squeeze within a squeeze. So we call that a primer. And that was his call. As we were saying, you're about to go really, really big on silver. Of course, he's quite right. Many people have called silver major moves. You've had to have the patience of a monk because this is an entire generation cycle. And it's taken a lot to break the great American economy with fiat proliferation, but eventually they've done it. And it actually started quite slowly. But once we ran this 90.58, which is our second interim, we were on short notice for, okay, we're backing off on the leverage size we use, and we're ready to cut and run out of leverage and just be investments. At some point, something's coming. And like the Bugatti Veyron it was, once it crossed the line, it still took a few meters to stop, and it ran to 120 there, and then it came back. Now, this came back right to a shooting star, and we said before this 3-month quarter is up, remember that's 30th of March, 31st of March that it'll happen, around about my birth date, this green candle will already have gone back up. So it looks much less like a shooting star, and that's already happening. It was at one point, the green was just that little bit there. And so this is an active candle. It's not complete. So we are going to refill it, but you had a massive rejection. Everyone will agree. But that rejection, Maggie, is going to be lost on a 3-month time frame. Eventually, that green goes all the way back. It's just going to be a minor detail on the way up. And just in case the target, you're not seeing the target, that's through 333 in our opinion. If people don't think that's ballsy as a call, let me just take the logarithmic off and put that on reg scale so that you can see exactly what's implied. Not only did we say you're going to run the 90s, quite quick succession once you triggered out of that primer at our Brent Johnson call there, you're also going to have a rest, and there's that wick fizzling back, and then you're going to go in, and this is the open areas. Once you've respected the second interim, and you saw that a bit when I was showing you on the shorter time frame, the H4 gold against the euro, our interim targets were met and respected, and you got a pullback. The second interim, we met, respected, and pullback. And you are busy you had that pullback, and now we've already begun the reversal path for what will be an impulsive move through there.
Francis Hunt warns many people are ignoring the largest currency debasement in history. The NASDAQ has broken versus gold, aiming for 1.4 ounces from 4.65. The Nikkei appears strong in yen, yet sinks in gold. Bitcoin has logged 7 straight months of losses in gold terms. The dollar snapped an 18-year trendline. Silver's $333 target remains intact after January. Someone purchased massive $15,000 and $20,000 gold calls.
So in terms of asset allocation and our macro technical analysis, this is not the time to be overweight stocks. It's even tech stocks, AI, NASDAQ stocks, whatever you choose to include in all of that. The composite index is there for everyone to check. Gold is your overweight. It is your primary basis of account. And this is a capital preservational error. And that is why we refer you back to our earliness on the 2020 and the reversal in the debt markets. It is a fiat and debt debasement. You are already having debasement in other assets, even though in some senses they may be making nominal inclines. In the key new benchmark of capital preservation, everything is deflating already. So many people ask, when reset, Francis? As if it's going to be a single moment in a single minute, like it's a 5:01 on the 23rd of April.
They ring the bell, Francis. They ring the bell.
Neon sign. If you're looking for a sign to have a drink, this is it. There you go. I'll give it to you. And in the same way, this is a process, and the process has already begun, and people are sleeping on this, Maggie. That's a huge point, and I want to just leave there and hand back to you on that. People are sleeping on a fact that the debasement is currently ongoing and running, and the only valid unit of account in an absolute leper colony of varying fiats that are all deeply ill with the same disease is, in fact, the gold ounce. And very few things deliver alpha to the gold ounce. What about Bitcoin? So here's the key analysis that we do, and we're quite consistent with everything, or we like to think we are, and we always aspire to be, and we'll be pulled up if we aren't. But if I put Bitcoin under the same criteria, you will see that the Bitcoin is actually be divested from in quite a radical and accelerating manner. You've got to bear in mind that much of this, what I'd call surgimentals and pumpermentals era, was off a very, very minor market cap in the early doors back in 2012. It wasn't $1.5 trillion market cap back then. It took a lot less money to drive it up. If I just bring this out of the log scale, which is the correct way to view long-term charts, and just remind you of the regular scale and reframe that a little bit, that is how Bitcoin is performing. I'll take all the lines off because they're now out of place. That is how Bitcoin's performance relative to the unit of account is. This is absolute rejection. This is absolute rejection, and it's technical failure on multiple levels. And in fact, we'd pre-seen this because this was a marginal high. This is just around 40 gold ounces, 40.27, I think it was the absolute high here, was a marginal high on the 69,000 previous cycle high. That was the high of 2021, 2022. So we've been battling to make higher cycles. These are your history, massive, okay, only just, and now not so. So the technical charts on this are saying there's not enough new money to keep scaling this, that it's going ever higher on an exponential valuation relative to gold. Further to that, you look at who the buyers are. All the Grand South and the slightly more sound money nations that have made many errors. China has a property boom that's bust and a lot of other things. But what are they buying? Well, the United States has accessed the record deficits with two key economic trade zones, Euroland and China. And what are they both buying? They are no longer aggressive buyers. In fact, of the long end, so from 10, 20, 30 into the big durations, 37% has been purchased and held by the Cayman Islands using basis trade funding. I mean, just give you an idea of that. And an interesting thing with Operation Twist, which takes you back to subprime, that was Bernanke buying the long end and making available shorter duration. And who was the recipient of the shorter duration? China. And they've let a lot of that run off. It's one thing to, okay, that's an interesting idea, I'll think about it, but people aren't doing anything. The holding in hedge funds averages between 0.5, 1% and 2% on average in general hedge funds. And that's a bit like, I consider it's a bit like insuring your car to the value of 2%. I don't know what you drive. Maybe I should mention your house, but I'm sure it's a nice house. I'm pretty sure a household cover is not 2% of its valuation. And that doesn't mean you should have 100% in gold, but I am overweight. There's quite a bit of technicals, but you might see this dashed red line over here. This has been your 18 years since 2008 trend line. And you were in this trend channel. I do need to go back to log scale because it's gone a little bit cockeyed there. Let's do it. There you go. That's your trend, and that is the 100 level that I put in blue. Now, you have a couple of setups with downside targets in the Dixie. So that means even in the leprosy world of contaminated fiats, the dollar is one of the scabbiest lepers, I'm afraid to say, if you'll forgive the phrase. So there's more downside in this, and I will show you that. You have been, in the fiat world, benefiting from your Chiffin's dilemma where you were getting inflated. You can see since the crisis of 08 and the proliferation, actually the dollar has had moments of dominance, but it reverted, it stayed in here. We have now broken to the downside. I'm going to drop the time frame on that and just bring you into shorter term, because some of you would like to also know the trajectory of the dollar with a strong US audience. And as I say, we are bearish here. And many people say too much. They feel, well, we sold off too long. They think there's a certain time frame. In the big cycles, you've never lived or seen a big cycle unwind. Everything is a typical frame of reference. Oh, you have one good year, you have a bad year. No. There are cycles where it just comes bad, because you don't know how good you've had it for so long. You've been a consumer nation at the cost of everybody else. So if you're seeing this right now, Maggie, I'm showing you the Nikkei. This looks like an absolute gift of an equity market to be participating in recently. Since 2009, if I put a measuring ladder on the lows there and I lock it on, you can see that this is up tremendously. We actually had called a massive inverted head and shoulder and said you're going to go through the legacy high of 89. We all remember the bubble era, and that you've actually got a target of 74,000 on this. And everybody will, why aren't we all heavily long the Nikkei index? Well, you can be, but you will be underperforming. You'll actually be in a rebasement. And the interesting thing about the Nikkei is that it went down and sideways for the better part of 2 or 3 decades as well as part of this. So in spite of its nominal performance recently, and in fact the Korean Kospi is even further extreme on a shorter time frame. But the minute I divide this by a gold ounce, you start to see a totally different chart. And you can see that generally this is graduating to the lower end of the chart. And it's the exact same with the NASDAQ. I'm going to bring it home. Your audience is going to have obviously a strong domestic market, and this is going to be even more harder hitting for those, the culture of equity. We're going to have the day when this element of equity, you look at the NASDAQ, this is just a beautiful index on all accounts. If I do the exact same thing and I say to you, Fiat is the masquerading, is the monkey on the grease pole that's slipping into the tar pit. You should actually be comparing it in gold ounces, which reflects the proliferation of Fiat, and we divide. We've crossed a key level. We've crossed a very, very key level. I'm going to just switch the eye on and you'll see the annotations I put in. There was a period from 1980 where you would have wanted not to be in gold, and this is part of the financialization of everything into tech era. So this was a hugely beneficial era. You don't need me to tell you that. Into 99, 2000, there was then a very violent correction. And then we started to have the subprime lows, quantitative easing came into play. A lot of that initial money first went into the tech and the growth. So you had a second but lesser bull market during the period of 2012 to 2021. Now, where are we now and what does it mean going forward? Because it's all very good reading the tea leaves in retrospect. What can I say? And the message is very stark, Maggie. If I show you this, this is a head and shoulder that we've been anticipating for quite some time. Left shoulder, complex head over there, and there's your right shoulder. We are in the month, right here in February, and I'm sharing this key moment with you, where we've tested the neckline. There was an initial rejection on that head and shoulder and a rally back up, and that has been rejected back down to where it opened and through, and you are now in what I describe typically as a triggering event of a major reversal in relative valuation for technology stocks compared to a gold ounce. And just to give you an idea how large this will be, there are values along here. It won't mean too much to everyone, but when you're at the 2021 high, you're at about 9. You're in 20s in the dot-com 1999. You're at about 4.65 on the triggering of the neckline. You're now below that at 4.41, and our targets take you to 140, 1.4, and lower still to the downside.